now, there's no panic button. What I'm saying is where the volatility, it's just starting.
Well, tonight, many investors are in panic mode after the worldwide stock market tumbled, as well as Wall Street. The Dow Jones Industrial Average fell more than 1,000 points today, and the Nasdaq dropped significantly after investors dumped tech stocks. Good evening, and thanks so much for joining us. I'm Marcella Lee. This has many people with a 401k worried about what to do with their money. CBS 8's Abby Black is here working for you to explain if this will impact your retirement, regardless of the amount you have saved, perhaps how old you are. A lot of people in a panic, Abby.
Right, Marcella. I mean, the nosedive that the global market and that the Nasdaq and the Wall Street took today has many investors frantic, but experts say by no means is this a crash. I spoke to a financial advisor who gives us some insight and says that there's no need to panic, but you should always keep an eye on your money.
The closing bell marked a tough day on Wall Street. This after Japan's Nikkei index plunged 12%, marking the worst day since 1987.
The economy is definitely slowing down. There's no question. So, what does that mean?
I reached out to David Reyes, a San Diego-based financial advisor who says this is the time of year for a volatile stock market, and it was expected to happen.
Well, October 2022 was kind of a low. So the market's really been kind of on fire since then. So the reality right now, it's more of a normal kind of correction.
The market's reacting to the jobs report the U.S. Department of Labor released on Friday. I found that employment rose from 4.1% to 4.3%, the highest in 3 years, and hiring is much slower than experts expected.
It's really had the economy, you got the election, interest rates, right, geopolitical fears. You have really four things that are driving the markets right now.
Working for you, we asked Reyes, what does the shaky market mean and how does it impact your money?
If you're in your 20s, 30s, even 40s, my best advice, just keep saving your money. Maximize your 401ks.
Financial experts say that there's no need to panic and sell off stocks, but they do recommend that retirees or those close to retirement need to manage their risk in what's being called a carnage market.
If you're 55 plus, you need to start really paying attention because your nest egg you have is a lot more than what you're saving every month.
Reyes says his advice applies to all kinds of savers, whether it be teachers or corporate executives. The principles to protect your money remain the same.
People don't have money because they were great stock pickers or they saved their money. So save your money, make sure your allocations are appropriate for you so you don't get so nervous when market volatility happens like this, and that will keep you sane and keep you from making rash decisions.
The Federal Reserve is expected to cut interest rates starting next month, which could signal a weak market, but this also could help some home buyers. As of Friday, a 30-year mortgage rate is the lowest it's been all year, which is 6.3%, Marcella.
Abby, a lot of people trying to figure out what to do. Should we just stay the course, wait for things to even out? And prior to this stock market tumble, there was already fears that we could see a recession. So what are experts saying about that?
Right, where some experts say there's no need again to panic here, we're going to be okay. But Goldman Sachs just said yesterday that I think they rose their findings to maybe going into a recession from 15% to 25% in the next year, which is scary to think about. But then also other, experts say, let's just wait. Let's see if the jobs will come back. If we can start buying homes again at a lower rate, that could get people more buying homes. So that can really fuel this economy. So there's still a lot of wait and see. But it's, when we saw what happened today, you can't help but think, this isn't good.
And I think his best advice was not to make rash decisions and don't put yourself in a situation where you have to make a rash decision. So even if no one takes any action this moment, probably not a bad time to review your financial portfolio, make sure that you're divested so that you don't have this big of a risk.
That's excellent. Yeah. I mean, you just don't want to freak out about it.
Right. Thanks so much, Abby.